In our earnings call, we actually showed our results in two segments. We broke up our business into two segments, the automotive segment and the cell segment. Now, both are in very different stages of evolution, and that's why we wanted to give the street more information to analyze our performance. So if you look at our automotive segment, the automotive segment in Q1 was at an EBITDA almost break even. It was negative 30 crores or so. And that also because of a one-time reversal we had to pay for a SOP change in the government for PLI accruals. So if that had not been there, we would have actually been EBITDA zero. So that means our automotive business is already EBITDA break even in EVs, which many people were not very clear about the automotive EV business model. And we have shown that even with fast growth, even with investing into penetration, you can improve margins. Now, there is a roadmap to profitability from EBITDA to PAT. Now, we have 2 or 3 strategies which we are continuing to execute on, which will deliver improving margins over the subsequent quarters. Firstly, with increasing volumes. In manufacturing businesses, you have operating leverage. So your fixed costs don't go up. The factory I've already built for a higher scale. The people costs, engineering costs, etc., all are built for a higher scale. Now, as I'm increasing my volumes, and just in Q1, my year-on-year growth was 32%. Q2, again, the volumes are public every month with Vahan portal, so you can see the volume growth over last year. So as volumes are growing, the margins are improving because costs are not growing with it. So that's one theme on the path to profitability. Second theme is, as we continue to do more vertical integration in EVs, EV supply chains are very different from ICE. So hence, as a strategy, we did much more vertical integration of manufacturing and engineering. And as we continue down that path, we further see margin expansion because instead of buying from a global supplier, we are producing ourselves and hence saving the 20-30% margin for that component that supplier would be charging us. And the centerpiece of that is the cell. The cell is the costliest thing that goes in the vehicle. There's a duty that you also pay if you bring it into India. Now, as our cell production goes into our own products by early next year, there'll be a very sizable margin expansion because of that also. So this is the roadmap. We've not put a timeline to it, but thematically, the strategic themes are operating leverage with volume expansion and vertical integration continuing to increase gross margin expansion. See, our mission at Ola Electric is to really make India a global EV hub. India needs to build a sustainable paradigm of energy and automotive. The global solution for sustainability is luxury cars, luxury EVs. That's what the large global EV companies in the West are doing. That's not relevant for India. India is two-wheelers, three-wheelers, maybe small cars. This is the majority of transport in India. And it's not just this is not just the Indian paradigm. This is the global South paradigm. Indonesia, Vietnam, Africa, South America, even parts of Europe, Eastern Europe, even mainstream, mainland Europe. India is going to be India will have to invent an EV paradigm for itself and an energy transition paradigm for itself. And that's what Ola Electric is looking to do, build the products that Indians need. And those are by vast majority two-wheelers, three-wheelers, maybe small cars in the future. But we started this journey with two-wheelers. Within two-wheelers, scooters. And you saw us build a portfolio of scooters and get very large market share. The next phase of our journey is motorbikes. And we are very strongly focused on taking the frontier of electrification to the motorbikes now, building a credible set of products, building credible, exciting products for the consumers, and building the foundational technology which enables all of this, which is the cell, the motor, the software, all of that. Now, once we do this, we will go into three-wheelers, etc. We've been public about that. We're not doing it right now. And then in the long term, if we have strong fundamentals on supply chain, the cell, which is a common platform across two-wheelers, three-wheelers, four-wheelers, we could sell our cell to other companies, or we could expand into future products which are not in our roadmap right now. We are very strongly focused on two-wheelers, but as we grow, we will add new product lines.
Is the electric car off the table right now?
Yeah, we are not working on it right now. It's like I said, our vision is to build products relevant for India and build technologies to enable those products at scale. And we're going in a sequence, two-wheelers and then other products. At a macro level, end ICE age is a given. Only question is when. ICE is a very ICE ka is a inflationary paradigm on two fronts. Vehicle का cost बढ़ता रहता है क्योंकि emissions compliance बढ़ता जाता है. BS4 था, फिर BS6 आया, कभी next level आएगा, right? So for more and more emissions compliance, you need to add stuff in the vehicle, and your cost only goes up. Hence, today also versus 5 years ago, the same vehicle which was 60,000 rupees अब 1 लाख रुपए की है. कुछ बदला नहीं है. 100 cc था तब, अभी भी 100 cc है, right? In fact, 100 cc 20 साल से वो 100 cc बाइक ही है, उसका दाम 30,000 रुपए से 1 लाख रुपए हो गया, right? The cc has not changed. ऊपर की cc आई हैं वो और महंगी आई हैं. So the vehicle product cost only goes up because of emissions compliance. The fuel cost also goes up because of macroeconomic factors. The fuel, the petroleum cost is also going up. Whereas EVs are completely different. The vehicle cost keeps coming down because the battery is a technology component and its cost is reducing. In the past 10 years, it has come down to 1/10 already. And in the next 5-7 years, it will further reduce to half. Right? So the battery cost curves only come down. So the EV vehicles only become more affordable. Second, the fuel cost is only going down because fuel cost is electricity. Electricity with more and more renewable, the cost of generation is coming down. 20 million two-wheelers are sold in India every year, 1.8 crore roughly. EVs out of that in two-wheelers are 7.5% last month. July ka data hai. 3 years ago when we started, this was 1%. The incumbents have, in a very tepid way, entered into the EV world. Thoda sa half-heartedly, if I can say. They have products, they are discounting their products, and you can compare my EBITDA is almost neutral on EVs. And उनका आप देखिए street से पूछिए उनका EBITDA कितना है. So who is able to sell with the market share I have and the bottom line I have versus compare their EV businesses to this. So they are far behind. I don't feel a sense of satisfaction in this. I feel that, again, our mission is to make India a global EV hub. And the sooner the incumbents realize that EV is the future, and the sooner they commit holistically and wholeheartedly, it will be great for the Indian ecosystem and great for me, great for my company, because we are the leaders. The more they resist this change, the more they publicly say, okay, oh, EVs, we are not sure, etc., the more they are, I think, harming their own companies and their own shareholders. Because it'll delay their transition to EVs, it'll delay India's transition to EVs. Well, I will do my bit. My goal is not to be 70% market share. My goal is to make India a full EV nation, right? And if others can take part in that, nothing like it, right? And but the more they delay the inevitable, the more their shareholders will suffer.